Okay. Hi, Aarjoo. Welcome back to our finance Q&A. And today we have just a few short but burning questions that a lot of people have been asking in the current financial environment. So I think it's like needless to say, everybody knows about what's happening with interest rates and inflation. Everything prices are going up, so a lot of people are getting a bit anxious or stressed. So I think the first question we'd like to just throw at you, what are your general thoughts and recommendations in combating this rising inflation and interest rates?
Yep, that's right, Veronica. That we have a lot of concerns from people who are especially on a mortgage, and are really concerned about the rates, the rising inflation, and we all can sense it, right? We all can sense it when we go out there. Everything has got expensive, whether it be your groceries, whether it be your filling up petrol in your car. It's all gone expensive. Plus, the rising interest rate has just been a cherry on top as well. So, what I would recommend in such situations, as I always do, is always be concerned and take care about those things that are typical control, such as your budgeting, your financing, and being on top of your expenditures and keeping track of where your money goes. Now, this is not bluffing or anything like that, but if you go back there and check where your money is going, like such as your monthly subscriptions, your direct debits, I bet you'll find at least $300 to $400 a month is going out on something that you actually don't use and it's not worth keeping. So if you actually cut off that expenditure and use that money towards your mortgage repayment, you could save hundreds and thousands of dollars every month and every year, and make that a saving as well. So make a habit of doing a financial check, maybe a few minutes every single week, which can actually be very beneficial for you, and you actually figure out that where your money is going and where you can cut off certain expenses, and that could ease your financial budgeting every month as well. The second thing that I would like to point on is credit cards and unnecessary debts. I've seen people and I've seen clients that who have a whole lot of credit cards worth of $30,000, $40,000, which they actually do not need. We are just attracted to credit cards because banks, they offer us credit cards to use, even if you don't need it, and then we just take it. And once we take it, we spend it, which means that we pay annual fees, we pay interest rates, which are not necessary. So keep your credit card limits to a minimum. I would suggest keeping your credit card limits equivalent to your monthly expenses. Just for example, if your monthly expenses, let's say, is $5,000 a month, take a credit card of limit with $5,500 or $6,000 a month, so you can actually make that spending through the card and keep track of your expenses every single month, and you don't go beyond that limit. And it also helps you in a way that if you just make that expenses through one card, it's very easy to track the expenses. You know where the money is going. People like to spend from different cards, 3 or 4 different cards. That actually makes harder to track the expenses. You don't know where the money is going. So these two things are really important to actually combat with inflation, and saving even $1, even $2 every single day. Yeah.
Yeah, I think that's really good advice, and I especially resonate with the part to consolidate your expenses because these days everything you can pay with one click, like Google Pay,
Yeah.
Apple Pay, Afterpay, Zip Pay, everything, like all your information is saved on your devices,
Yeah.
making purchases, transactions so easy, and subscriptions, like you said. So yeah, it's very easy to go unnoticed that you're just keep spending and spending without even
That's
realizing it.
right.
So that's really, really, really good advice. So but I guess that's more from a expenses like outgoing flow point of view. So what about for people that actually have had some money saved up in the past few years, but like in the current environment, they're a bit anxious or skeptical about investing in properties. Like what would be your advice on that? Should they still invest in properties? Should they put the money somewhere else? Like what's the best advice you can
Yeah.
say on that?
Yeah. As we all know that the rates are pretty high at the moment. The property prices are also on the higher side of things. So people are skeptical investing their hard-earned money, hard-saved money on the properties at the moment. So they have questions of where should I be investing my money, and should I pay off my home loan with the savings that I have, or should I invest in the properties right now? Should I wait? What should I be doing? So that's actually a very very common dilemma that most of the people are at the moment. I would also like to put some light on the interest rate at the moment. So most of the people at the moment are in variable rates because either the fixed rate has expired and they are on variable because the fixed rate are pretty much very expensive in comparison to what the variable rates are at the moment. So I'm assuming most of the people are on variable rates. So you should be knowing that variable rates gives us a lot of perks such as redraw feature, offset feature, which actually helps us to save money through our own savings. I'll just give an example. Let's say if you've got a mortgage of $500,000 and are at an interest rate of 5%, and you've got a savings of, let's say, $70,000 sitting in your account somewhere, and you're not being able to utilize that savings because you don't want to invest in a property right now, you could actually put that money into your redraw or into your offset account and save money and interest, which means that if you've got $70,000 in your redraw or offset account, you only pay interest towards $430,000, and a rest of the repayment will go towards the principal payment, which you are actually saving money. You're saving at least $150, $200 a month just because of that savings. And it's not going to be on a long run because you are going to invest that money when the time is right, when you feel the time is right. So until then, you can actually save on the mortgage repayments itself, which is also a great idea. People as per my understanding, people do not properly know the difference between an offset account and a redraw account, but they're pretty much very much similar. And if you have offset, if you have redraw, it's the same thing. Just put the money on either of those accounts and you save heaps of money. And you notice that as well at the end of the month when your repayment comes out from your account. So that's what I would suggest to all the people out there.
Okay, so what if I don't have this redraw or offset account features on my mortgage at the moment? Can I apply for it now without
Yep,
having
absolutely.
to?
So if you're on a fixed rate, I'm assuming if you're on a fixed rate right now, you're already on the lowest rate because you might have locked up the interest rate 2 years back or 1 year back at twos and threes. But right now, if you are on a variable rate, you will have the return offset feature. If you're not aware of what to do, you can contact your mortgage broker, your financial planner, or whoever your first point of contact is to get this activated ASAP, because you are losing money. Basically, if you're not using it, you're losing money. So contact your mortgage broker as soon as possible to get this thing activated and to know more about how you can put that money on the return, how it helps you calculate the repayments as well.
Okay, okay. So I guess the last question to conclude our little quick chat today is that even after a few rounds of rising interest rates, it still doesn't feel like we're at the end of the tunnel yet. So everything's still probably gonna keep going up. So what would be your last piece of advice for people to stay on top of their games?
That question is something that we cannot have an exact answer about as to where when the interest rate is going down or when it's going to change, when it's going to come back to normal. But just on this note, I would like to share a very interesting thing about how the bank calculates your mortgage repayments. Let's say if you're wanting to apply for a loan of worth $500,000 at an interest rate of 5%, the bank won't only just look at the repayments that you're going to make when the interest rate is 5%. The bank keeps a buffer of 3 to 4% to make sure that even when the rate rises to, let's say, 9%, you are still in a position to make the repayment, which protects you from going into financial hardship. So from that end, you're all covered, which means that tomorrow, even if the rate goes up to 7% or 8%, you can still make the repayments, mortgage repayments, given that you are earning the money, you are earning the income that you were earning when you applied for the loans. From that, you're safe. Now, it's all about how you can make your budgeting easier, keep saving money, and protect yourself from those kind of hardships, right? So, yeah. Um, Coming back to the question of what you can do about this rising interest rate is making utilization of your redraw, your offset feature, talking to your mortgage broker, talking to your existing lender about negotiating the rates, because banks are very good at negotiating rates when you are on a variable rate. So talk to your bank, talk to your lender, talk about reducing the rates, and utilizing all those features that are there in your home loan account.
Okay, that's a really good insight because I think a lot of people wouldn't really know about this buffer thing that you mentioned. So once the interest rate goes up, they would think, oh, I can't afford my mortgage anymore, or I can't afford getting a new mortgage or investing in another property. So I think that's a really good insight for people to know that.
Yes.
So yeah, I think on that note, we'll wrap up our Q&A today, and I'll see you next time.
Thank you, Veronica. And yeah, I'm always up there to share any information that I would think would help people out there. So the more questions we get, the more presentations we can make about that. And thank you so much, Veronica, for this discussion today.
Thank you, Aarjoo.